Hey, what's up, everybody? It's Brad, and we are going to get into a daily review of the chart of ES, S&P 500 futures contracts. So this is January 30th, 2023. And before we jump in, I just want to mention that I did start a Discord community, and I'll put the link in the description. The point of the community is to have a place to talk about ICT theory and using it live while trading. So hopefully you can get some people to share, their knowledge, their resources. This will be free forever. I will never charge for this community because the point is to not make money. Not make money from the Discord. The point is definitely to make money, but by learning the theory and growing as a trader. And I want to create a space. I really didn't find much out there for ICT theory that wasn't paid, right? Other than ICT himself, of course. So the point would be to have a free space that people can, be a beginner or a seasoned ICT student and share knowledge and help everyone grow, because I think this stuff is just next level. I just want to see people grow and grow myself. Anyway, enough about that. Link will be in the description, so hope to see you there. All right, we're going to start with the daily chart, like always. So today was this red candle here. So coming into the day, one thing that I did note is that we have a daily fair value gap here. Right? Let's go ahead and color coordinate this. Make sure you have your templates, people. It's important. So let's talk about Friday to try to build our narrative here. Friday, we took out this high, right? We stopped at a gap somewhere in this wick. My big target for Friday upside was the 50% line of this wick, which was 4117.75. We didn't end up getting there, but we did have a very strong reaction to a 1 hour gap in this wick. Feel free to go look it up, December 13th. There is a 1 hour gap. We hit the 50% line pretty cleanly and did react off that. Now, when I pulled up the chart this morning, I saw that we had come down into this gap pretty well, pretty far down, not far down, but we ended here and we were in this gap, or at least had touched it, played around with it, right? To me, I think it would be a lot to ask to come to like the 50% of this wick for today. I think it would be almost impossible to ask for it to come to the 50% of the 13th wick. Before the weekend started, I thought that could be the final move of this uptrend, hitting the 50% of that wick, and then we come down, close the gap, all this stuff. Now I think we are in a consolidation period until FOMC on Wednesday, right? So I think we're just gonna keep it barcodey. We only have one more day, so keep it barcodey, including Wednesday. I think it'll just consolidate a little bit. So that's exactly what we saw in the daily today. It came down, and once I saw how the morning was playing out, I thought we're gonna end up just closing this gap up, and it'll be, ready for the next move. We're accumulating, right? Excuse me. That came out of nowhere. So yeah, let's jump in straight away to the 15-minute. And I want to just mark one thing here, and that's the 830 price. I've been really focusing on that Power 3 concept that ICT talks about, which is accumulation, manipulation, and distribution. So over the weekend, I was just thinking about it a lot. In one of the videos I watched, he talked about how you can look at 830 price, you can look at 930 price, and you can see they generally are going to run at a buy side or sell side target in preparation for the move, right? Some people, or he'll sometimes call this Judas swing. This is the manipulation phase. It's going to grab more stops before, and more longs or shorts before it makes the first move of the day, the morning move, right? So we see that here, right? You don't see it take out. It tagged this 15-minute low here, but if we'll jump into the 1 minute, you'll see it took a relative equal low with that 8:30 move. And that to me said we're gonna sweep up as the morning move, which we did. Now, where is it gonna sweep up to? That's the next thing you need to know, right? So you have your bias, you think it's gonna do something, but where will it stop? That's why we love ICT theory so much, because he can come up with a precise where and why. His answer to this, which I didn't get until I saw his tweet, was the weekly gap, right? So on Friday, if you noticed on the daily chart, on Friday we closed here, 4083.75, and we opened here, the bottom of this candle at 6 p.m. on Sunday. That is, what is that? I can't see, but there's a gap, right? 4076.75. Did I get that gap right? Yeah, there we go. Oh, this sucker. They're so close. Anyway, we have a gap there, right? Pull it over. Bam. See that? Pretty precise, and we'll look at that and see where there could be a reversal pattern there and how you could plan your entry once you see this hit a target, right? One other little thing I would like to point out, because I thought it was pretty cool. Let's draw a gap here. Now this is a 15-minute gap, so let's use our styles, people. Use our styles. I would always drag a fib on these gaps, by the way, just because that 50% line is important. It didn't end up being important today, but a lot of times it will be, so just get yourself in that habit. So we have a 15-minute gap here from Friday. I just want to show this because I thought it was pretty cool. 50% fib. What did we do when we opened at 6 p.m. on Sunday? It came back, tagged right on that. Now this 50% line isn't correct because the 50% is actually 12.5 cents. So TradingView rounded it up to 0.25. So you'll see we went one tick under. So I would say always go to the bias of it going to that 50% line, right? So it can't go to 12.5 cents. So it goes through to 40.74 even, right? And we're 40.74.25. Pretty interesting. Bounced off that, came up, and it continued on. Now, not trading it this time, but cool thing to see why that 50% line is so valuable and why I always put it on. All right, so we have our narrative for the morning after we see the 8:30 do this. We want to see the 9:30 do that as well. We don't here, and I think the reason is because we had the move at 8:30 and it just was so bullish to get up to this gap. It did not, and it had collected a bunch of sell side, right? It did not need more. It was ready to go. So it took off. So let's jump into the 1 minute so we can go through a couple of these areas that I want to point out that I thought were pretty cool to see, reversals and stuff, like reversal entries and maybe even trend starting entries, right? So 8:30 price, here we go. And I mentioned the equal lows. So you see we start here, and this is after we've gone up. You see this here? We've gone up and we've taken that out. Relative equal highs. So we've taken out buy side. 8:30 starts, boom, 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 takes out some sell side, and we're off, right? 9:30 comes, it drops down and just tags 8:30 price, and it's ready to go. We do create a gap, of course. We create a 1 minute gap with that move at 9:30. We trade into it. We want to look at a couple things here. 50% line, we get to that. And we want to look at the order block. We didn't get to that, but that's okay. It was just so ready to go. Gets to the midpoint line and shoots off. So we get to our big target up here. Now, we don't know that's the big target, right? So when you're doing this live, and the ICT has tons of experience with this, so a lot of times he knows that's the big target, but when you're starting out, you don't know that's the big target. But what you do know is that there are targets, right? Like you can come through here, you can mark highs, right? You can mark highs, you can find gaps. You can say, oh, here's a gap here, 50% line. I usually like to do this with the 4 hour, 1 hour, 15 minute, 5 minute. Mark out gaps, mark out significant highs, lows, get your targets for the day. Because once you hit these targets as you're going up, you know, okay, 8:30 comes, we're probably going up, 9:30 confirms, we're in. Okay, we've gotten to a spot. Do we have a reversal? No. Oh, we've gotten to a spot. Do we have a reversal? Potentially, right? This one. I actually almost came in on this, thinking we'd hit our target, but I saw ICT's tweet and decided, you know what, let's just see if it'll get up to that gap. It did. It did get up to the gap. Swing low, break, right? So any of these, you want to be looking for fair value gaps. Swing low, break, no gap. Swing low, break, no gap. Yeah, correct. Swing low, break, gap. Comes up and through. This was enough for me, and I'll tell you why. It was enough for me because this swing low here, to me, was very significant. Now, I'm not an expert, all right? But I think that would be an order block, right? For the upside move that we just finished. Snapping that with a swing low and creating a gap, and then we go, what? We don't go to the 50% line. So it's a little sketchy, right? But I thought it was worth the entry. We were able to get in and put my stop right up here. I gave a short stop, a very tight stop. So I knew it was a little risky. I wanted to be out if it just continued up, right? Ended up didn't continue up. It kept the downtrend going, and I was very happy about that. I was targeting this low here. Just want to get one significant swing low as my target. Great trade, right? The next entry point that I thought was cool, I had some other entries that, you know, they ended up, I think I had 1 loss and 4 or 5 wins today. A couple of them were a little fluky, you know, coming back to a midpoint of a gap, you know, something like that, where it was just a retrace and I got sketched out and I just closed out. Ended up being right most of the time with being sketched out. But this here, all right, so we came up and there was a significant gap here that we came up to, right? So I thought to myself, that seems like a reasonable place, and I was actually looking on the 15 minutes, and I think you can see that gap on the 15 minute. Let's see where we are here. Yeah, so I drew out this gap on the 15. We had come down, and I had a good trade And we're coming back up. Actually, I think my placement is off a little bit. Need to do better at journaling. So this will be my plug for remember to journal what you did all day. I didn't keep a very detailed journal today, but there was some reason why I thought this was a potential reversal point. And then when we came and created a swing low here, and when I say reversal, I mean just a shift in market structure, right? So we had a shift here, we have a shift here, we have a shift here, because we keep going lower. And that was the last real shift for the day. Kept going lower. Broke here. Now, when we broke, we created a gap. I entered, I believe, on this candle, 1128. Got pretty sketched out. Not gonna lie. I put my stop way up here. Had some money from a couple trades here. I thought I'll give myself some room. I believed in the the shift in market structure. Put my gap all the way up, conservative, or sorry, put my stop all the way up, conservative stop there. And it came up, and I was about to bail on this trade. But there was something that I remember from a video that I saw over the weekend. And it was this. Ignore this gap. I said this gap is crap, right? No intended rhyme there. It's a crappy gap. I took this gap. I saw a video over the weekend where someone used a gap on the upside combined with the order block as a more precise entry and continuation point, right? So we have the order block here, and actually a lot of times I'll just pop this on it. You just want to see it get into the order block. I mean, ideally 50%. We might actually have gotten 50% here. Look at that. Exactly 50%. I didn't even see that. The thing that I saw that convinced me to stay in was the bodies here were respecting this old gap from the up move. When I saw the bodies respecting the gap, I thought I'm gonna see this one through. If I get stopped out, I get stopped out. I didn't wanna close it out. We ended up coming down, and I was targeting this midpoint line on the daily, 40.49, and we came down and took that out cleanly. Could have targeted these lows here, and actually, oh no, we didn't get there, but could have targeted these lows. I liked the midpoint of the gap. I thought that was going to be a strong reaction point, so I wanted to secure my profit there. Ended up being a great trade. So just something to keep in mind when you're in a potential shift in market structure. These gaps can act sort of as resistance or support when you pull them through the candles. The order block does the heavy lifting. You know, you definitely want to look at your order block and trust that a lot. But sometimes these gaps can fail you, right? When you have a gap from a break of a swing low, it can fail you sometimes. You know, price can just sort of fade above it, and you can get out of the trade because you get scared. Especially with a lack of experience. Like I don't have too much experience with ICT. You know, been in this for a couple months now. You know, that was scary, and I almost left the trade. So we ended up making another gap here. It doesn't really matter. It does break a swing low, so it was just a little sloppy for me, but I wanted to point that out because I thought it was pretty cool to see, and it gave me some reassurance that I was on the right track with that shift in market structure there. So yeah, that's really all I wanted to point out today. You know, on the daily, my bias ended up being true. We did end up closing the gap. I think we ended down here somewhere. I know that is interesting. I was watching the chart after close. I was thinking, wow, we really closed the gap pretty good, huh? It came right back up and has been just flirting with the bottom of that gap. Oh, looks like we fell off since I've been making this video, but funny stuff. You just start to see these, once you draw them out, you start to see these quote unquote coincidences all the time. You know, the midpoint lines, the gap, top and bottom, where price just sort of gravitates to, flirts around with, right? Let's clear our drawings. Anyway, fun day. I hope this gave you a little more experience in ICT theory, and once again, come check out the Discord. I would love to have more people, more like-minded people, come hang out and talk while the market's open, and share experience, share knowledge, share videos. Yeah, that's it for today. I'll talk to you guys later. Bye.